All right, everyone, welcome to week 10 of Selling Weekly Lottos. Every week, I sell options in the stock market to gamblers, and that's how I make passive income. Just like every week, let me start with the disclaimers. Number one, I don't use margin. I don't sell naked calls, naked puts. All right, some people ask me why I don't use margin. I can make more money. The reason is because this is an asymmetric strategy. There's actually a higher downside than there is an upside. So by using margin, you actually have a higher chance of accelerating your losses. When I don't use margin, I just have a normal chance of losses. All right. Number two, I'm totally okay with selling my shares if they get assigned and buying shares if they get assigned. All right. I'm not married to my stocks. All right. I'm totally okay with it. That's why I write the contracts. Number three, this is not free money, guys. Some people call it free money. This is not free money. Investing is never free money. There's always a chance to lose. All right. So that being said, the winner this week is me. I won 1 out of 1 contract. All right. So let's talk about the basically I had a few comments last week about how I'm gonna lose everything. All right, people have been commenting, telling me, "Hey, I'm gonna get wiped out one day. I'm gonna lose everything." And let me tell you, there's always a chance, but I don't think it's gonna happen. That's very extreme. All right, this is just like long-term investing, but with a little bit of an income strategy connected to it. All right, I'm not just blindly selling $100,000, $200,000 worth of contracts and just praying. All right, I'm looking at the market conditions. The two main things I'm looking at are if the stocks that I like long term, if they're pulling back, if they're dipping, I'm looking to sell puts, because when a stock is falling, the puts are going to be priced higher on the implied possibility of the stocks going even lower. With covered calls, when my stocks are pumping, I'll sell covered calls because when they're going up, the calls are priced higher because there's a chance the contracts are pricing in the chance that the stock is going to keep going higher. So if the stocks are dipping, I'm looking at selling puts. When the stocks are pumping, I'm selling covered calls, not just throwing my money out there and hoping for the best. All right, so I do look at market conditions. That being said, this week, let's go ahead and take a look at the one position I had, which is, boom, the AMD 165 put. All right, I sold these for a total of around $500 and bought them back for around $150. The total gain was $439 or so. All right, just one contract this week, guys, because last week I had my highest risk. I took the highest possible risk that I've been doing since this series has started, and this week I decided I'm going to take the lowest risk. All right, let's go ahead and take a look at my benchmarks. Boom. All right, benchmarks are down this week, guys. My total income is up, but everything else is kind of down. My average risk is down. And the reason is because I made less money this week and I got a lower percentage yield. So my average weekly return is going to be down. My projected annual income is down. My yield, average weekly yield is slightly down, still around the 1%. And then my projected estimated annual percentage yield is also down just very slightly. The profits from profits is just up a little bit. All right, this is basically if I just decide to take all my money out and just use my profits and continue at this pace, I'll be making about $125 a week. All right, just profits from profits. All right, and then my weeks to double is still around 90 weeks. All right, so in about 90 weeks, my profits should be equivalent of my average return. or my average risk, sorry. All right, I did add a new one. You can see at the bottom right here, a buffer. I call it the buffer. All right, this is because people last week have been saying, I'm going to lose it all. All right, so I added this metric, and this is going to show how much the stocks need to fall in order for me to get wiped out or lose everything, lose all my profits at the very least. So you can see last week, my buffer was only 5.5% because I was risking $233,000 last week, and it would only take a 5% move down for the stocks or for my profits to get completely wiped out. But this week, because I only risked $49,500, the stock would need to drop almost 30%. Okay, almost 30%. Is that possible? Yeah, it's possible for any stock to go down 20-30% in a week, like if aliens take over planet Earth. All right, but like aliens from outer space. Okay, that's going to be a bad situation. But very, very, a lot more breathing room as far as a buffer goes. So going forward, I'm going to start trying to find the sweet spot of how much buffer I need to protect my profits, and also giving myself enough risk so that I can continue to make a good weekly income. All right. But as far as I'm concerned, I'm pretty happy with making almost $450, $500 in 1 week using $50,000. If you put $50,000 in a high yield savings account at 4%, it'd take you almost 3 months to make $500. All right. Even just normal investing, like in an index fund at a projected rate of 10% per year, it would take you an entire month for your stocks to go up $500. So I did that in a week, so I'm pretty happy about it. And yeah, just let me know if you have any questions in the comments, and see you next week.